AMC stock moves lower as Cineworld files for bankruptcy. I think this was mostly priced into AMC stock, and I think that's a big reason why AMC has been falling, because Cineworld going bankrupt in the UK as well as in America, that's not a good thing. Now, obviously, AMC is a lot different, and we'll talk about that, but I really want to get over the effects of this bankruptcy, because this is not the end of the effect to this and the effect it will have on AMC stock. I also want to talk about the data and information that came out today. We have a lot of Fed speakers. Most importantly, Fed Vice Chair Brainerd vows, quote, "We are in this for as long as it takes to stop inflation." And you could really pull out a dovish response out of this speech, or a more hawkish response out of this speech, depending on what you pay more credit to. And we're going to talk about that, and that's a big reason why the stock market is up 1% at the time of recording this video, basically across the board. Russell 2000 up 1.03, NASDAQ up 1.19, S&P 500 up 1.07, and the Dow Jones Industrial Average up 0.83%. So let's get into all of this information: the AMC, the APE or text data, the Stonko tracker data, what the markets are pricing in for the Fed, upcoming catalyst, and much more here in this video. So getting straight into it, guys, I want to talk about Fed Vice Chair Brainerd and what she had to say today. So the key point says Fed Vice Chair Lael Brainerd vowed Wednesday to press the fight against inflation that she said is hurting lower income Americans the most. Without committing to a specific course of action, Brainerd said the Fed needs to remain vigilant. And basically what the consensus of this speech is, Brainerd is basically saying they don't want to over tighten, they don't want to stop all economic activity across the board and just put the economy in a very bad place. They don't want to do that, but they need to keep going at a consistent pace to get inflation down. Now, a lot of people are very excited about next week's inflation report that will come out on Tuesday, and a lot of people are expecting inflation to come down in a big way. That obviously sets us up for a big surprise, which would be potentially inflation does not come down in a big way, or it could make the markets very happy if inflation does come down in a big way. Either way you put it, though, we're setting up for a big catalyst, a big move coming next week on Tuesday. But don't be fooled. You still have big catalysts coming out here today, as well as for tomorrow. So today you got a lot of Fed speakers. You got the balance of trade, which came in around expectations. That information came out at 8:30 in the morning. Definitely gave us a little bit of a bullish reaction in the markets today. And you do have the Fed Beige Book at 2 p.m. That's going to be like a summary of what's going on in different districts of the Fed. If you guys have not heard, or if you guys don't watch my videos, then maybe you don't know about this, but the Fed Beige Book is the Atlanta Fed, the New York Fed, the Chicago Fed, the San Francisco Fed. They all give reports about what's going on in their district, right? Manufacturing, jobs, wage increases, on how they really see things going over the next couple of weeks, next couple of months. So that will move the markets coming at 2 p.m. But a bigger thing is going to be tomorrow, Thursday, September 8th, 2022, you will have Fed Jerome Powell that speaks at 9:10 a.m. in the morning. So just as you're getting into really the thick of pre-market trading, right before the opening bell, you're going to have a lot of statements from Fed Powell, and depending on what he says, will definitely move the markets one way or the other. I will say, if you're someone looking for a bullish reaction in the markets, you might actually get that tomorrow, because the markets are expecting a 75 basis point rate hike, and the actual statistics here is about 79% in favor for a 75 basis point rate hike, whereas 21% of market participants are expecting a 50 basis point rate hike. Now, it's not a guarantee we're going to get a 75 basis point rate hike, but the markets are expecting it. So if Fed Powell comes out and says anything along the lines of a 75 basis point rate hike is not necessary, or that they want to just do like call it 50 basis points over and over again, or 25 basis points over and over and over again, well, that could initially be a bullish thing for the markets. It could show a slowdown in the pace of Fed rate hikes. But hey, this is all speculation. Depending on what Fed Powell says tomorrow, that's going to be the dagger in the coffin for the markets, or potentially a big tailwind to send the markets higher. And we have fallen about 9% over the last month. So it's been a sharp drop, and it wouldn't surprise me to go up a couple percentage points from here, or even down a couple percentage points from here. I believe we're about 4% off of 2022 lows, so it wouldn't surprise me to see either which way, you know, up or down 4% over the next week or two. Kind of what I'm expecting, either new lows, or we're going to get back up to that 410, 415 range on the S&P 500. And you might see that first reaction tomorrow after the Fed speaks, but most certainly next Tuesday when you have the CPI report come out. That's really going to solidify a move that we start to see. So nonetheless, there is all of that information. You also have the Apple event, which is going on right now, which is really not making for a big market reaction, especially not with Apple stock. They're you know, only up about 0.5%, so it's not like anything groundbreaking, but there is some pretty cool things going on. So watch for that continuation effect with Apple. 12% on the NASDAQ, 7% weighting of the S&P. That's the most important stock to the stock market, and especially the indexes. Now, you have also seen the British pound falls to its lowest level against the dollar since 1985, which this is not good, especially for the UK. I mean, it's showing that you're likely to get a recession. It's likely to be far worse in Europe, and especially the UK, than it is going to be in America. So something to pay attention to. Also, interest rates are rising again for mortgages. The bond yields have been going pretty parabolic over the last couple of days. Not something we have covered too much here on the channel, but that has definitely helped to fuel some of that downside that we have been seeing as of lately. Like I said, 9% over the past month is a pretty big move down. And you're also seeing this article: homeowners lose wealth as rising interest rates weigh on home values. Key points: some homeowners are losing wealth as high mortgage rates weigh on home values, at least on paper, as the once red-hot housing market cools. Sales have been slowing down for several months, but mortgage rates now double what they were at the start of the year. Data suggests so-called tappable home equity may have peaked in May. So that's basically your safety net, right? If you have a $500,000 house and you owe $200,000 on it, well, technically you have $300,000 worth of equity that you can take out. Basically, with those home values going down, is less equity you could pull out, and it's less of a safety net that you have. So, you know, real estate moves very slow, but it's something that is very important to the world, especially the American economy, because everyone needs a house, so you definitely want to pay attention to that as well. Now, let's go ahead and take a look at AMC and APE as far as the Ortex data. As you guys know, APE is still on the threshold securities list, and that means there is a lot of shares that will have to be bought in APE, and that's possibly why APE is up almost 1% today. You've been seeing AMC fall, APE going up, so that's why I like to own both of these you know, securities, stocks, whatever you want to call them, at the same time, because when one goes down, the other one usually goes up. Now, with that being said, the cost bar average is at 11.38%, cost bar max at 12.79%, and cost bar minimum at 8.64%. So nothing too crazy over there. It's kind of relaxed a little bit. And something interesting, the share utilization is now down to 98.34%, which is still very high, but off of that 100% level that we have been at since APE has started to trade. The estimated short interest of free float sitting at 9.32%. Shares out on loan, 48 million, days to cover 1.32. It's a little bit different than the data that we have been getting as of recently, as of the last couple of weeks. Definitely a little bit different, so keep that in mind. As far as AMC, we'll go ahead and refresh this page. AMC stock is, let's go see, AMC is unchanged for the day. So including APE and AMC, you're up about 0.70% on AMC stock today, which is definitely a good thing in my personal opinion. AMC has really started to ramp up over the last, call it half an hour or so. We were down, as much as like 1-2% for a majority of the day. Now you are positive with the stock. So let's go ahead and take a look at the actual data for AMC. As far as the option activity for the day, 18% positive order value, 4 orders totaling $166,000. It's not a big dollar day for AMC options, which really means this doesn't matter all too much. Positive order value of 18%. So you've seen quite a few puts, but they're not for a large amount of money. A $21,000 put, $27,000 put, and an $87,000 put. In terms of AMC, the market cap, the amount of people trading the stock, the volume, and usually what's traded in AMC options, today has been a very, very punitive day overall. Now, when you look at the cost to borrow numbers on AMC, that's where things get a little bit interesting when you're comparing APE and AMC. AMC is not on the threshold securities list, but the cost to borrow max is at 50.67%. Very, very interesting. It's been elevated for a long period of time, and I think we're well overdue for that bounce off of the bottom that we have been sitting at over the last couple of weeks. Cost to borrow average at 24.62% and cost to borrow minimum at 16.4%, numbers that are very elevated across the board. Now, the short interest value amount in dollars sitting at about $912 million. Estimated short interest of free float at 21.61%, free float out on loan 38.22%, and the shares on loan at about 197 million. Days to cover 4.33 and cost to borrow at 18.05%. Also 100% share utilization. So the data over here is looking pretty damn good, and if I were to choose one security to be in APE or AMC, I'm going with AMC all day every day. So please do not ask me about that, because it's going to be AMC. The data just looks a lot better in regards to AMC. Now, as far as option activity expiring this Friday, and keep in mind we still will see a big move by the end of this week, you only have about 2,400 calls that are in the money, 64,000 calls that are out of the money. But for next week, that's where things could heat up a little bit more. You have about 3,600 calls that are currently in the money and about 203,000 calls that are out of the money. These are big numbers. These are big numbers. And the difference here, 3,500 compared to 203,000, that's a big difference. So there's a lot of dry powder on the sidelines. If we can see AMC stock move up, a lot of these options will have to be pretty much instantly hedged for. Same thing on the put side. In the money puts at 67,500 and 19,500 for out of the money. So there's a lot of in the money puts compared to out the money. If the stock goes up, these puts are going to go out of the money and the calls will go into the money. That is two forms of buying power for AMC stock, and something you definitely want to watch is always going to be the option activity. Now, depending on what happens with the beige book over the next couple of minutes, I believe in about 20 minutes that will come out. That is what is probably going to move the markets for the remainder of the day. If things are just too good, if economic activity is too good, the worker is too strong, if you get that narrative of strong economy, strong worker, well, that's probably going to mean strong inflation, and the markets will probably move down off of that. If you start to see more talk about weakening of financial conditions, the labor market, manufacturing starting to go down, maybe more homelessness or something along those lines, keep in mind Wall Street is ruthless, does not care about your emotions, your stability, where you're eating, where you're sleeping. It doesn't care. So keep that in mind. Not trying to be insensitive here, but that's just how the markets feel. If you start to get more things along those lines, that will be seen as a positive thing for the markets. That's what's going to move the markets from here. Now, a couple key technical indicators for AMC stock. The MACD extremely oversold. The RSI again extremely oversold, and just the price action of AMC has been pretty much straight down. even the slightest bit of bullishness is going to be a very good thing for the stock. And I think a lot of that Cineworld bankruptcy situation is already priced into the stock, and I think that's a big reason why we have been falling over the last couple of weeks. And now that that is kind of in the light of the markets, and it's something we all know about now, that's a certainty, I think that uncertainty for the stock and for the business could be going away, and that could act as a bullish thing for AMC stock. So that's pretty much going to be all for this video. That's what you guys need to know. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys want to get totally free stock, Webull, Moomoo, and Public offering you guys in between 1 and 10 free shares depending on what brokerage it is. If you guys have not signed up with one of those or all of those, I definitely recommend you guys do that. The worst thing that happens is you get yourself some free money. That's pretty much it. Am I forgetting anything? If you guys want to come trade with me live in real time, link down below in the description of this video as well. That's what I was missing. Thank you guys for tuning in, and I will see you in the next one.